Hi, this is Karen Deis, and I've heard that some LOs would rather chew their arm off than read the mortgage rules. So, if that's you, this video is for you. Will help you some of the major changes that happened within the last 30-day time period, because the devil is in the detail. It's all about those nuances that get those loans approved. So let's go ahead and start with Fannie Mae, a new rule about deferred student loans. We all know that it's really tough to get an initial monthly payment if the student loan has been deferred. So Fannie says, I'll tell you what we're going to do. We're going to count 2% of the loan balance as the monthly payment. But here's the catch-22. A lot of times that 2% is higher than the actual loan payment. So it might be better, especially if you're tight on the DTI, to get that actual monthly payment and plug it in when qualifying them for the loan. Now, new update on cash reserves. Fannie says that you cannot use retirement funds as cash reserves unless you can prove that the funds can be withdrawn. And that also means that reading the fine print, because if they can be withdrawn only because employment is terminated, well, you know what that means. That's a no-go. And you have to get the statement from the employer. So don't be surprised if you show cash reserves that an underwriter wants the backup documentation on the details on how they can obtain the cash reserves if needed from their retirement account. So if you don't need the retirement account for cash reserves, I recommend that you don't list them on the 1003, or it's going to be a red flag. And you know what? There's always an exception to this rule, because Fannie goes on to say that if the person's of retirement age, you don't need any documentation. So, look at it that way. Okay, an update from Freddie. It used to be that the borrower could get a 1% cash advance from their credit card to pay loan fees. The credit report, appraisal, processing fee, those things up front. Now, Freddie says they increased it to 2% or $1,500, whichever is less. But here's the dealio. They still have to have the funds verified somewhere to pay that cash advance, and that additional amount has to be included in an additional monthly payment and figured in the DTI. So the only reason I can think of is that you would even offer credit cards, or that a borrower takes a cash advance is for convenience purposes, because it still have to meet all the regular underwriting requirements. Now here's one that you've got to have a heads up. You've heard this before, but you've had realtors ask you, beg you, to close a loan prior to the repairs being made, especially the ones that are required by the appraisal. Well, Freddie has updated some rules on that. First of all, there is no escrow if it affects the safety, soundness, and habitability of the home. There has to be a valid reason, like weather, building shortage, labor shortage, that type of thing. The funds have to be controlled by the lender, and it's a 180-day time period, about a 6-month time period. But like anything else, the underwriter has the final say on it, because those appraisals are being scrutinized now as well. And so when you submit the loan for final approval, if you know that there's going to be repair on escrow, submit all the documentation that's required by Fannie and Freddie. And there's one more thing. There is a mortgage talking points flyers on all of the bullet points for your real estate agent, so they understand exactly the documentation they need for escrow repair requirements. A couple more updates on manufactured homes. Basically, Freddie says that they are not going to purchase a manufactured home if it's been moved from one site to another site. Part 2 of that is that there's a manufactured home that has an add-on, let's say an attached garage, a family room, a second story even. That manufactured home still must meet Freddie's selling guideline requirements. And it's, even though the appraiser might have said it was a stick-built home, It's got to still meet the requirements of a manufactured home. Okay, let's talk about derogatory credit. You've seen it all over, but here's something to watch out for, especially since FHA had a conference call on this very subject. It seems like there's a lot of instances where people have included their mortgage within the bankruptcy, but it's been discharged for 2 or 3 years, but come to find out that the foreclosure documents have never been finalized. The lender is sitting on them. They haven't signed the papers. For some reason, they haven't even initiated, even though it was taken care of in the bankruptcy. What FHA and HUD says is that the foreclosure process, the waiting period, begins the day of the final foreclosure paperwork. So you might have had it all discharged, but they're still going to have a 2 or 3 year waiting period for that foreclosure to take in effect. So this is tripping up a lot of loan details and approvals these days. So it's best that you investigate it, especially if you see a mortgage included in a bankrate up front, or you're not going to have a dead deal. Now, one last thing. There have been some updates on the new credit disclosure form that go into effect on July 21st. We suggest that you get a copy of the disclosures from your credit bureau and come up with some kind of a script on how you're going to explain them to the borrowers. You know, it's just like anything else. They try to make the complicated simplified, which becomes more complicated. In fact, I recommend that you get some samples, and we have one on the website, so you can also review it with your real estate agents, because you know those clients are going to be asking the real estate agents and you what it means. So, final words. Here's my thought about what's happening in the mortgage industry today. You know, in America, we say that you are innocent till proven guilty. With the mortgage industry, the current mood in underwriting these days, you are guilty till you prove yourself innocent. It's a great way to explain what's happening today in the mortgage industry to your real estate agents and your borrowers. So, check out all the details with mortgagecurrency.com, because if you know the rules, you'll rule the market. Thanks for listening.